Hello and welcome to Big Deal. I'm Nisha Poddar. Let's today focus on the deal scenario and how Nomura's top iBanking team really views the street on this particular front. Let me welcome on the show Amit Thawani, who's the Managing Director and Head of Investment Banking India for Nomura, and Jwalant Nanavati, who's the MD, Head of Southeast Asia Investment Banking and Head of TMT Asia Pac for Nomura. Gentlemen, so good to have you on CNBC-TV18. It's been a while. We have done a status check, and also congratulations, Amit, for taking over the helm of iBanking for Nomura India. Now, tell me, under your leadership, what will be the strategy in terms of generating the business?
Firstly, Nisha, thanks for having me on the show. It's always a pleasure being here. As far as Nomura India is concerned, it's been a very good run for us over the last decade. So it's not something we're starting now. And strategy, as far as we see it, is also linked to the fact where our strengths are. Our strengths are in 4 or 5 sectors, which are very clearly sort of outlined for ourselves. We've been working in those sectors. Products-wise, we have all the full capability suite in terms of M&A, equity capital markets, and financing. And we are growing each of these businesses.
Yes.
So there is no one vertical which we think is not doing well or requires more effort to build. Everything has to grow. And we are oriented in that direction.
Right.
We are putting all our might behind our Indian clients, and interestingly also global clients, looking to be in India.
Right. So global clients looking to be in India, and India is a hot favorite for many economies now. So Jwalant, good to see you in India. You've been in India, you've done iBanking here, you moved to Hong Kong, now you're in Singapore. So you have a great vantage point from where you see the TMT space really developing, the digital tech revolution that really took place. What are the hottest topics of discussion, and how do you picture India in the midst of this?
So thank you, Nisha, for having me over, and always a pleasure, right? Look, I think India is, what I say is in a structural sweet spot when it comes to technology, media and telecom companies. You have 3 mega trends driving this. Consistent private equity and venture investment in this country, in the sector. We have almost close to $500 billion of dry powder globally, of which around $40 billion VC investments are earmarked for Asia. Now, a lot of it has come to this country, and I think it'll continue to, I think the trend will accelerate. Second, during this downturn, a lot of the growth companies have tightened their belts and have become operating profit positive, and I'll touch upon that in a bit. And third, the management teams and the corporate governance levels in the country, due to various legal changes that have happened, including bankruptcy law and so on and so forth, have improved significantly over the last decade. With that, you see a growth of very unique private companies. So we just hosted this private tech day where we had 22 corporates across various tech sectors, 100 plus investors in our offices here in Worli. And what an event. Last 3 days, Amit and I have been just completely at it, and a really exciting time to be in India.
Give us a sense of the themes developing in that tech conference, and what is the biggest talking point now?
So one thing is very interesting, right? Out of the 20 odd companies that were there, almost 2/3, or maybe I would say 3/4 of them were already profitable. Which was a big change compared to a couple of years ago. Second, the diversity of investor universe, from very large cap private equity funds to hedge funds to the crossover investors and venture funds have all are all looking at this, and it's all patient capital. So a lot of the accelerated capital providers have taken a step back, but they're being replaced with really patient long-term capital providers. And third thing, in our view, what will happen is a lot of the new kind of technology companies. So when we look at TMT in India in last 5 years, we essentially have only tasted one sub-segment of it, which is consumer tech. Consumer internet companies, to be very frank, right? The next generation of technology companies will be software as a service businesses, new age IT companies, data analytics businesses, financial technology businesses, but they're really not fintech, they're more tech-enabled financial services companies, right? Digital lending, credit providers, and then Gen AI-based businesses, which are going to be very exciting.
Generative AI has become the new buzzword, but Jwalant, many takeaways from what you said. But we have seen the startup space and the funding winter continue. How is that looking now, Amit? And from the conversations in the tech conference, are you picking up? Are there any green shoots?
I'll probably just add one thing to what Jwalant said. He talked about a number of things. I think there is no more capital on steroids. We were in a mode last few years where capital was on steroids. Now it's more mature capital, more capital which is patient and thinks about business as a business. And also the interesting part over the last 3 days, while companies have achieved EBITDA break-even or profitability and all of that, it's also the management team's maturity. There is a level of sensibility in which how they are thinking. There is a level of maturity in terms of how they are planning the next 2, 3, 4 years. That's the big change.
So some of the IPOs in the pipeline from the startup space, and they will make an attempt in next 6 months or so, they're all showing profits on the books. But I have one question. It shouldn't be very based on optics. Jwalant, we have seen one listed company with adjusted EBITDA. The street didn't take that well. So it shouldn't be just optics or engineering. There should be a clear path to profitability and profits. So the maturity has come, lessons learned. But what is it that you're sensing on the ground?
So, it's really interesting you asked that question. I think what corporates have realized, startup community, I would almost not call them startups anymore. These are growth companies. That's probably the right way to define them, right? These are high growth companies. They've understood this concept of marginal utility of growth. So there's a benefit of growing at 50, 60, 70%. It's almost like a Formula One car, right? You can have the best car, the best driver, right? But even that driver needs to drive it in a sensible way. Look, I just came from Singapore. We had a big event, so using that analogy. But genuinely, founders have understood that beyond a certain acceleration, the best of founders and the best of companies cannot control their growth. So a measured, controlled growth, which generates solid contribution margins and net margins in the business, is the name of the game. And honestly, it's very hard to sort of paper over those cracks, right? Either you have a genuinely good business or not. And I think investors, as well as regulators, both will be very diligent around it this time around.
So valuation is the key. And since you're playing around with the word margin, let me also put it that the diminishing marginal utility of scarcity premium was very evident by the end of it. Amit, is there sanity on valuations? Are we going to see that in the upcoming ones? Because I still see some of the EV company per se trying to raise funds at a much higher valuation, which didn't get takers. So we have such instances available on the ground.
Well, that's now a little bit of a sunrise sector, right? So let's for a minute leave that aside, because that's the new next wave, which is
sector of the future.
That's the sector of the future. But look, I think leaving aside that part of it, valuations in general, whether it's on public markets or private markets, have sort of come to some reality check. And it's part of the funding winter, it's part of all of this thing that has happened. So as I said, I don't think now capital is about valuation alone. There'll be many companies who will not get the capital at all, at any valuation.
Right. So all right, so there is sanity on that, but we always come up with buzzwords. Jwalant, you will agree. So it was earlier digital, data analytics, and now generative AI. Any company attaching artificial intelligence to their deck is expecting a higher valuation. How is the AI scenario panning out? Give us a gist on that.
So I'll tell you, AI is much more than a buzzword, right? If used appropriately, generative AI particularly, but AI in general, can be a complete game changer for all industries. So I think if you have to think about generative AI, you'd almost need to think about it like internet. Internet touched every single sector between late 90s till even today, right? And I think all companies which are forward-thinking will incorporate the tools that are going to come through. And look, think about it from a test match term, right? We are in the first half of first inning, in the first session.
Yes, yes.
There's going to be a long game here.
Yes.
And I think this will be continually being incorporated. Now, there'll be companies which will be early adopters.
Yes.
They will improve that efficiency, operating efficiency. There are also social implications to generative AI in a country like India, which has large populations and employment considerations, right? So there'll be some sort of government policies as well coming through in various countries, actually, not just in India.
Yes.
So it'll all come through in coming years, but it's here to stay.
Oh,
right?
yes, it's evolving very fast.
Yeah.
And but AI will be one of the aspects to be watched out for going forward. And many of the companies who have really adopted it much faster are the ones who are going to be interesting and will be also asking for a premium in terms of their valuations and investor.
Well, yes and no, right?
Yeah, it's an early cycle philosophy, right?
Yes.
It's still an early cycle, it's growing.
All right, so I take your point, and on that note, we'll just slip into a short breather, but we'll discuss much more in details about what's happening on the ground when it comes to the deal street, M&A, and deal making in the country, and what's the view going forward for the rest of the year. Stay tuned to Big Deal. Welcome back. You're watching Big Deal, and we are discussing the Deal Street view with the top team, iBanking team of Nomura. Now, Jwalant, we were discussing the whole tech space. Now, private equity and VC have a very big role to play in our growth capital in the last few years. How is the outside view on India right now, and what are the important themes that they are more attracted towards?
So in tech, media, telecom, India, at least when it comes to Asia Pacific, has become, for the first time, frankly, in recent memory, the highest priority market. I mean, no prizes for guessing which one was the highest priority market. Has always been China.
Yes.
We have had our set of issues in China, which I think we're working through. And it still remains one of the most critical tech markets in the world, along with the US. But India has emerged as an interesting market in this environment, and so has Japan, actually.
Yes.
So you have this very interesting dynamic at play where you have sort of China plus play in the technology, media, and telecom sectors.
Yes.
Particularly in the verticals that are of most interest, which are relevant to India. Look, IT services still remains very exciting. Healthcare IT is going to be very interesting. Even some companies which are driving captive growth are becoming more and more relevant. The second space is software as a service. I personally believe that software companies out of India would be almost the next wave of IT services companies. They'll be so large, and there'll be global software companies emerging from this country of relevance. And third, I would say to some extent, will be the tech-enabled financial services, mainly because India has built out this incredible digital infrastructure, which is effectively relatively free to use, right? UPI and so on and so forth.
And we are far ahead of many developed economies when it comes to fintech.
Exactly.
Yes.
Exactly.
But I have one question on fintech. It was almost like a quasi-consumption story from which fintech really had benefited. But then it came in the realm of various regulations which they didn't anticipate. So now they are struggling with that. They pretty much thought that this bull run is going to continue unabated with very little regulation, which actually came to a standstill. So when we talk about fintech, there are two separate ones. Ones that enable, and the others are credit-giving fintechs. How are you seeing this, and what is the interest level on the credit-providing fintech?
So look, I think digital tools to underwrite risk are real, and they can really accelerate the amount of underwriting. They can manage credit risk better, right? And we've seen that around the world. India is no different. Absolutely needs to be regulated. But look, I also want to take inputs from one of the best fig bankers I know in the country, right? So Amit, maybe you can chime in here, because I think this is a very relevant question between both our universes.
Yes,
really.
what do you think?
No, I think clearly, and it's now being seen as a digital lending sort of a business. I think you have to give credit to some of these let's say, mid-sized platforms. They've gone through COVID. They've gone through certain fairly complex environment that people were facing, and they've come out pretty good.
Yes.
So we know the NPA ratios for some of these platforms. It's pretty sensible.
Yes.
So I think you have to give credit to the fact that data analytics is helping in better underwriting.
Yes.
That was happening for the larger banks earlier, and now it's happening for the mid-sized platforms.
Yes.
So it's here for real.
Yes.
It's here to stay.
Yes.
And I think the initial apprehensions that probably all of us had, I think has to be relooked.
And Amit, I've always known you as a financial services expert. And deal making has been really hectic on this particular space, and also the investor interest in this space in all the pockets of financial services has been very high. How do you see it going forward, and what are the trends picking up?
So let's separate the two, pure capital market part of it, and let's call it the private side of it. I think on the capital markets, you're going to see a phenomenal run over the next 12, 18 months, and probably beyond.
Yes.
It's probably a run which a lot of bankers in this country haven't seen in the last decade. So we are in for a very strong environment for financials for all the right reasons.
Yes.
Great growth environment, great balance sheets, growth is coming back, people are digitally enabled. So it's going to be a very good run, and capital markets are clearly showing it.
Yeah, also banks are an investment, quasi-investment for the economy.
It's playing for the economy,
Yes, yes.
So I think that's quite very obvious, and I think you're seeing companies raising capital, banks have started coming to the market, and you'll see a lot more.
And there's huge demand.
And there'll be demand.
Yes.
And this is demand both from Indian institutional investors and definitely FIs as well for the larger franchises. Coming to the M&A environment, it's again buoyant. There is reasonably good level of interest.
Yes.
And I'll pick two trends there in general, not for financial, but even otherwise. Historically, for the last 7-8 years in this country, private equity was probably the sole buyers of assets.
Yes.
And that's changing.
Yes.
Anisha, we've spoken about this in the past.
Yes.
The Indian corporate sector has become meaningful participant in M&A transactions across sectors. And these are not just small-sized deals. These are pretty sizable transactions which Indian corporates are aggressively pursuing.
Yes.
That's a big change. The second thing which we think is happening, and it will take a little bit more time, is the international strategics, which are stepping in, and this can be meaningful size transactions. So I think it's really three segments of the market. The capital markets are on a roar.
Yes.
The Indian corporates are stepping up, even the mid-sized corporates.
Yes, and lots of consolidation in
correct.
various segments. Yes.
And let me give you an example of a recent transaction which we sort of part of it. Sheila acquired Kurlon, the mattress company, Sheila Foams. We raised a QIP for them just last week.
Yes.
Very successful. So capital markets giving them capital for an acquisition which was to be done. That's kind of a relatively new trend in that sense.
Oh, yes. So the strategic interest and M&A strategic companies, that's something that has been in the waiting, now beginning to pick up. And that's one big trend that is picking up. According to the themes now, Jwalant, give us an overview of what's happening overseas, which is yet to come to India or just about beginning to come. What are the trends that you're likely to see in the TMT, digital, and I am a firm believer that media is going to be a big quasi-consumption story like fintech was. So what's your view? What's coming up next as a trend? We have just last 2 minutes.
So look, I think from the next trend, I think we spoke a bit about AI, but frankly speaking, let's pick, India is going through three big changes, right? Young population, digitally enabled, per capita growing. So consumer internet, which right now is not very exciting for anybody for what has happened. I personally think in next 18, 24 months, all the new generation consumer internet businesses, gaming, entertainment, esports, will all come to India. We brought Sony into an esports company in India earlier this year, right? So we are going to see a lot more investments from multinational global players also, as well as large domestic players across those verticals.
All right. So both of you, and being sector agnostic here, one from tech, one from many other sectors, that more multinationals, strategics are going to make way into India, and that is going to spur another wave of M&A and transactions.
That's the next wave to watch.
Very interesting discussion, both of you, Jwalant and Amit. Thanks so much for coming over to our studio and having this interesting conversation and giving us so many takeaways on the deals reel going forward. Thank you so much. And with that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.